You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionFit.com.
All right, everybody, that rockin' tune means it's time for only one thing, and that is the option block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo, coming to you live, or I should say live to tape, live to us anyway here on the program. We're working on beaming it out to you live as we record, and we're coming up with a few interesting ideas to do just that. Gotta stay tuned a little while for that, but in the meantime, live to tape we'll have to do from, of course, the Options Insider Radio Network studios here in the options capital of the world, scenic and still decently warm Chicago, Illinois. And of course, we produce a lot of great content here on the network, including many, getting close to 500 now, episodes of the Option Block, as well as, of course, Advisor's Option and the Options Boot Camp and all the other fun stuff. We produce Options News Rundown on a daily basis, all sorts of fun stuff. Where can you find all of that goodness we crank out on a daily and weekly and monthly basis? Well, of course, the mothership, theoptionsinsider.com, is the place to go. If you haven't been there in a while, surf on over. Got some good stuff there kicking around for you, including top left corner of the homepage, Insider Radio Network tab. Click on it, and you're pretty much off to the races. All of the universe of our options content, coming up on 9 years worth of content, available at your fingertips right there, listeners. So never complain you don't have stuff to listen to. We got you covered. And, of course, you can find it iTunes, TuneIn, Stitcher, et cetera, wherever you find your favorite podcast programs, including our own mobile app, available for all of the big platforms, except, I think, Windows Mobile. Only one you can't get it on. If you use it, let us know. We'll send you the RSS feed. You can add it yourself. All right. And joining me on the old program today, starting off, let's go closer to home. So outside of Chicago, but still within the radius of the options capital of the world, lies a sleepy little hamlet known as St. Charles, Illinois, where you will find none other than Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir.
Always happy to broadcast from the sleepy little hamlet, as which we know.
Sounds like things are getting a little less sleepy out there. We'll get to that in a little while when we get Uncle Mike's update on the trading block. But before we get to that, we are also joined by another little sleepy burb, a.k.a. the hinterlands of that great state known as Maine, where when he's not clamming and rolling up the old lobster cages, he is indeed dispensing some options analysis and edumacation and all that fun stuff over there in the land of the pit. He is the Rock Lobster himself, Mr. Andrew G., a.k.a. Andrew Giovinazzi. Mr. Rock Lobster, welcome back to the program, sir.
It is nice to be back here. Some guys in the pit chat today threw me some stuff because I didn't have any lobster pots in the water yet. And then they're surprised. Wow, you're really going to do that? I go, yeah, I'm really going to do that.
That is the neighborhood chatter over there in the hinterlands of Maine. All right, and with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is the portion of the show where we break down what was moving, what was shaking, what was rocking, what was rolling, what was heaving, what was hoeing in the old broad marketplace. Today, we are recording this on Monday, October 26th, for all of you playing the home game. Hard to believe October already drawn to a close. Crazy how quickly this year is flying by. This is another day of a little bit of kind of will they, won't they dance out there in the old street today, with the major indices kind of vacillating around a bit before settling out pretty much unched on the day. The S&P pretty much down a little bit on the day, slightly, about a quarter of a percentage point or so. The Dow down about a similar percentage point range. The NASDAQ pretty much unched on the day. And the good old VIX cash getting a bit of an inhale after that weekend, up about 3/4 of a point to close a little bit above the 15 handle. So we're back in the mid-teens again for all of you playing that game on the old vol views. Will it be south of 20? Will it be north of 20? Well, it's just barely over 15 these days. Of course, we talked a lot on recent shows about how they had kind of annihilated the full term structure of the VIX futures. Now starting to put some of that back in as we're facing yet another week where the Fed, once again, unfortunately, on the horizon. Also, big earnings coming out this week. So there's a lot for us to discuss. Before the bell, there was Xerox, of course, and a lot of fun to be had in that name. But before we get into all the earnings, love, and other fun stuff, we'll first turn to my fellow compatriots here on the old All-Star panel. Let's see what they're cooking up. And I promised you some more action in the sleepy hamlet known as St. Charles, Illinois. So I think we'll start there. Uncle Mike, what's cooking in the formerly sleepy burb, now rockin' and rollin' area known as St. Charles, Illinois?
Well, the word's out by now. TosaW actually got into a trade. That's the talk of the town now.
It only took about 3 months.
Yeah. Well, no, over the last couple months, we've been negative on the year in the S&P, and I've been doing things as I've talked about on the show, but we got our close in positive territory on Friday in the S&P. And so with that, by my trading rules, I have to start buying some long calls for my SPY call strategy. Now, with that, I'm dipping my toe in the water, so to speak. The amount of total deltas is far from the highest level. So what I ended up doing today is I bought a January 205 call on SPY. And with that, the way with which I selected that, I can get into a little bit more in the strategy block. But the other trade with which I did with it to create the spread was I sold a November 210 half call. So with that, it's not a ton of deltas, but I'll go through some of my plans of what if this happens, what if that happens, what about the Fed, what about Apple when we get to the strategy block. So stay tuned. Or, since this is a recording, I guess, just fast forward. But then make sure you listen to the whole show after it.
Just skip ahead to the rock lobster and just go to that part. That's what you're saying, right?
Yeah, skip the rock lobster, that dirty, rotten, frickin'.
He's got nothing to add, but let's just check in case he does. Mr. Rock Lobster, anything to add aside from your obvious umbrage?
I was about to say, I've got one word to add to this show, and it starts with you. Everybody's like, umbrage? Okay, anyway, sorry about that. As far as the day was kind of bid, we saw that early last week. They sort of bid the futures early last week, and then it all became just a sad crush. So I guess, if what's funny is as long as the EU says they might keep going with QE, why is Yellen going to raise rates? It almost felt like it's sort of preordained a little bit, but we got a little bit for volatility futures. Google over 700 running, Amazon over 600 still running. And there's no stopping some of the favorites. Microsoft, I think it's a multi-year high. I don't think we've seen this level since the good old days back in like 1999 or something like that. It's like $54 or something like that. So for all you Microsoft bulls out there, you're happy, including me. But other than that, I think some of the really, really good tech that produce some decent earnings kind of leading the market right now, and everything else is just how we're getting to like this near, I guess, back to even for the year or up. It's still a little bit of a head scratcher, to be honest. But yet here we are, and we're pretty much riding the coattails of Mario Draghi and the never-ending pot of money that is going to go into QE globally.
Well, you're right about Microsoft. There was, like we've said many times, a lost decade in that name for post-2001. But last year or two has certainly seen a reversal of that trend. It was trading in the 30 handle a couple of years back. Now you said, again, in the 50 handle, 54 today, closing about 54 and a quarter or so. I've seen articles, is it too late to buy Microsoft? You haven't seen those kind of articles in a long time. So, while Microsoft stock back, particularly in the go-go 90s, was the next best thing to just the gift that kept on giving. And then it stopped giving for a long time, and now it seems to apparently be given again. People liking what they're seeing out of the old softie these days. The Surface is really starting to, I think, appeal to a lot of people. And this new one, the new Surface Book, sounds like a lot of people are interested in that. Those are launching this week, and of course, the recent earnings don't have anything to do with that, but I'm sure the outlook going forward has a lot to do with all that fun stuff. Speaking of things going forward, we, of course, mentioned the Fed coming up, but some of the big stuff coming up this week, as we, of course, are coming off that big rally of last week. S&P up over 2% last week alone. So rally ho mode, a lot of it, of course, driven by the earnings you mentioned last week. And the Rock Lobster just mentioned Amazon, the old Googs, whatever you want to call them these days, Alphabet Soup, what have you, Mickey D's, of course, Rally, and then, of course, Microsoft, all just kind of blowing the doors out of it, kind of taking some people by surprise as people were kind of gearing up for a lackluster, to say the least, earnings season. And then some big names like that, just 1, 2, 3, 4, knocking it out the park, tends to send the market rally. And of course, China helping that as well. It's telling Miss Yellen, no, we're going to cut rates over here. And so that helps to boost the market as well. But of course, in terms of what a lot of you guys are watching this week, and what Uncle Mike used to watch back in the good old days, was, of course, ye old fruit company. They have earnings coming out tomorrow, Tuesday the 27th, after the close. Hovering right now as we speak, listeners, about a 115 or so rally, and actually off a little bit today, off about 4 handles, but still not the lackluster, not the rally home mode we've seen going into previous announcements. But still interesting stuff. Also a little bit light on the volume side today, only about 850,000. I say only in quotes because for most other names that would be just knock it out of the park volume. But for Apple, they've actually been averaging about 930,000 contracts a day. So a little bit lighter over there. Not as zealous to the upside, not as call heavy, no doubt in part because it sold off pretty heavily today. Uncle Mike, this used to be the portion of the show where I would toss it to you and say, give us your in-depth strategy and positioning ahead of Apple. I know you've kind of wound down in favor of that much more broad lady known as the S&P, but still, you must still be watching Apple. Anything out there that's catching your eye? Anything that's going to make you maybe perhaps think about diving back in?
How can you not watch Apple? It's such a beautiful company, but I still would like to see some more innovation. And so I think with today coming down, one of their suppliers in Britain or something like that had some type of an announcement that wasn't favorable, and that was what's driving it down. But with it, I think going into earnings, I believe last I looked, the straddle was somewhere around like the $3.50, $4 mark, somewhere in that neighborhood. I think they're going to have more movement out of it. And if I were a betting man on Apple, which I am not at this point, but if I were, I would say it would go to the downside.
Well, it certainly seems like the market is agreeing with you, at least today. You're right, the supplier news weighing on it a little bit today. And a lot of people, even though we see the typical, analysts raising their price targets ahead of Apple earnings, which is kind of almost just a done deal, an expected thing at this point going into the announcement. Still, a lot of people are expecting Apple to be facing some headwinds this cycle, of course, with the dollar and the exchange rate being chief among them. They are counting for, I think it depends where you look, up to like 60% of their revenue from outside of the country. So when you have that, the dollar becomes a big issue in that. And certainly, of course, slowing growth in China will, of course, feed back into them as well. And they, of course, listed or launched the iPhone at the same time in China this year as they did here in the States. So that helped boost those early sales numbers. But still, going forward, I'm interested to see if China can really make up for some of the other hits that they're taking out there. So it'll be interesting to watch. It sounds like a lot of people are out there kind of sharing Uncle Mike's sentiment, Uncle Mike's viewpoint. Apple, not perhaps the darling it once was. Who knows? Uncle Mike perhaps even saying if he was still playing out there, he may actually play to the dark side, to the put side going into this earnings, which is unusual for him. Mr. Rock Lobster, what was turning it up in Apple over there in the pit chat today?
Surprisingly, kind of similar. Nobody really loving it. We have had Apple bulls in the past, just not this time. That's normally, of course, when Apple might surprise everybody, but it's not looking, I don't know. Just we were looking at puts are pricing a little more expensive. Everything just looks downside bent a little bit. So, where that goes for Apple, I don't know, but earnings are kind of a crapshoot, but it's certainly not pricing in the upside like they used to. Sort of like, okay, we're all done on, we're all done on the upside now. We're only going to go sideways and pay you a dividend, even though we have all this money, until they create another product. I think Mike's right. They, for a while there, they were innovating at a high rate between, changing the music industry, changing the phone industry, changing the tablet industry. Now they're just kind of, creating kind of knockoffs of what they had the year before. They're not, so it's whatever was happening. It seems like it's stopped to some degree, although they still make, I guess, good enough products to sell hundreds of billions of dollars worth of stuff a year. So, but in order, you need some growth. Right now, they're not creating new products.
Yeah, and it's a tough act to follow with what they actually had. This is like when a big rock band has a great first album and it sells 8 trillion copies or whatever, and then when they have to follow it up, it's a difficult thing to do, that they have to do everything that they just did before over again. Like you said, Andrew, Apple's done this several times by changing the music industry, changing the phone industry, changing the tablet industry, but they're almost running out of industries with which they can change. So if they can change the car industry, maybe that'll be something. Maybe that's their next industry with which they'll go for. They've tried changing the watch industry, but in reality, I don't think they really wanted to do that. I think they just kind of did it because everybody wanted them to, and they had to put something out there. But the reality of it is that they need to get another product.
Yeah, who'd have thought that we would say going into Apple earnings that the puts would be rich? It's been, I can't remember the last time we've ever said that, but that is indeed the case. Looking at some of the numbers out here, the 30-day skew out there in Apple at the 80th percentile. They measure puts over calls out there in a lot of these equity names, listeners. So a strong positive skew of about 15% indicates a hefty premium to those puts. It's again in the 80th percentile. Usually you don't see that going into Apple earnings. Usually, if anything, you saw the bias was to the calls, but it sounds like the bias is indeed leaning to the dark side these days out there in Apple land. Speaking of the bias, Uncle Mike, I know the other place you like to play these days is out there in the shiny stuff, gold. Gold having a bit of a good run, certainly since we first started talking about it again back on the network back in mid-July or so, up about 8%. Since that range for all you technical watchers out there broke through 200-day moving average to the upside last week, so a strong bullish signal out there. And not surprisingly, we hit on this a little bit on vol views last week, but I know, Uncle Mike, you love the shiny stuff these days, that they're loving themselves out there. Some calls out there in gold as well, whether you're looking at the skew in the big gold futures options or perhaps more close to home for a lot of you, the GLD product out there looking to very call heavy as well out there. We mentioned on vol views again the skew, lighten it up. Even people, usually relatively conservative people like Manish over there at Barclays, recommending 1x3s out there in GLD. So you know how rich the skew is getting out there. About 2.3 calls for every put out there from GLD, which is up from beginning of this year about 1.6, where it was hovering back in January or so. And looking at the CFTC numbers as well, a lot of love from a bullish perspective out there in gold. They increased their net long positions out there in the Commitment of Traders report by about nearly 33,000 contracts. That's up to about 82.5. That's the highest level since mid-May in terms of bulls out there in gold. So, Uncle Mike, all that would be a long way of coming back around to saying, what are you up to out there in the shiny stuff these days? What are you up to in GLD?
Well, couple things. Just still long the a put just to protect it, and looking to sell some covered calls whenever we get a little bit of a rise in things. So nothing too extraordinary in that. Just trying to stay conservative with it. Overall in the year, GLD it closed 2014 at 113.58. It closed today at 111.43. Now it's had quite a heck of a ride throughout the year. But on there, I like gold right now, even for the short term. We've had a little bit of a pullback from where we bottomed out at around the 107 level a couple weeks ago. It's had a nice little run. Now I think this is going to be continued, and I think we will go positive very soon on this, and I think it's going to be a nice little rally these last couple months of the year. The other thing that I think is a factor and why gold has had this little bit of a rally is that the talk of, or at least it might not actually happen, at least the rumor of it happening, of Europe, of our man Super Mario possibly throwing some more money into the QE file. And if that's the case, then that would be a bullish thing for gold because there's more free money. Combine that with the fact that commodities have just gotten pounded so badly that I'm generally bullish on commodities, not necessarily because of the fact that I'm expecting more global demand or anything like that, but just they're so gosh darn low. So I think if you combine all those factors, I really like gold right now, even as a short-term trade, for those of you that don't believe in going long-term with gold.
Thank you for that, sir. And now it's time for us to keep on rolling right on into our next segment. It's time to kick off the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome back to the Odd Block, the portion of the program where we break down some of the weirder stuff that's afoot out there in the realm of options. Today, going to kick things off with a newcomer. This is Dio, not unfortunately the late great Ronnie James Dio of hair metal fame and holy diver fame. No, unfortunately, not going to hit on that today. That would be an awesome Odd Block in and of itself. But no, we're going to move on. Start off with Diageo PLC. This is an ADR, in case the name didn't give it away. Ticker symbol DEO. Newcomer to the old Odd Block. Closing today about 115 and a quarter or so. It's the name that does about nearly 1,000 contracts a day. And keep that 115 number in mind, listeners, because it did about 115,000 contracts today, listeners. So just lighten it up a little bit, a fair amount. Doing a few contracts, I think you could say, listeners. And of that 115,000 or so, over 100,000 coming in one pretty sizable roll of what appears to be a short strangle. We started watching this morning, and we saw 28,500 of the Jan 2016 105-140 strangle going up, paper buy-in, to turn around then and sell some more of the April 2016 same strikes 105-140 strangle, doing it all for a net $1.80. So effectively taking that strangle and rolling it on out to April from January and picking up a $1.80 or so to do that. And looking here at the chart of good old Ronnie James Dio, as I shall refer to it forevermore here on the old program, and looking at it here, and it does seem to be that the downside, the 105 strike, could be where he is perhaps playing with a wee bit of fire. As recently as August of this year, the name was trading about 101 there, so it has been south of that 105 strike before, and a $1.80 certainly ain't going to do it if it starts rocking and rolling down to the downside again. So interesting stuff here. Our friend perhaps drawing a line in the sand, saying he's willing to pick up some of this good old Ronnie James Dio at around south of the 105 level. Mr. Rock Lobster, will start here. First off, how big of a fan of Dio and Holy Diver are you, A? And B, are you a fan of this strangle roll?
Holy Diver. I was just trying to think of a Dio voice where I just kind of do that loud wail.
Yeah, that's kind of what it is. It's just a loud scream, but it's awesome in and of itself.
It was a thing of beauty, I have to say. However, what's funny is, what's the range in Diageo? I think Ronnie James Dio sounds better, but we'll just call it Dio. The range in Dio, I think, is $10 this last year. $10 range for $100 and something stock. Not a lot, so not surprising. Somebody straps on a short strangle and then rolls it out. The thing is, they got something for the roll. I think another 80 cents or something like that. But and that goes to show you about that product. Dio is probably unlike the life of Ronnie James Dio, who I think might have consumed a lot of Diageo products. They're selling some strangles because the stock is just not very exciting, as opposed to Mr. Dio, who was quite exciting.
Uncle Mike has a good way to look at it. We can compare the stock range to his vocal range, which we know Ronnie James Dio had quite the upper register he can go to So I don't know. That means there's a lot of upside left, I guess, for Dio. That must be the way you interpret that, right?
Well, they're selling the 40s for 30 cents, so I'm going to say not. Although with the yield, I mean, I could see how this is a yield play. They're trying to, get another 1.5% out of the bad boy. I could see it. And you sell these strangles instead of buying the stock, and you pick up as much yield as the divvy anyway. So unless 140 is in the cards for Diageo, it feels like this is a strangle that will probably make money.
You think so? You don't think it's going to end up owning a lot of stock here?
Maybe. I mean, but how much are they getting for those puts, though? That's the other thing.
They did the whole thing for what, $1.80?
Yeah, and what are they trading? What's trading 115, something like that? So they might. That's the bottom of the range, and I think they're happy with the bottom of the range.
Clearly they are. I think we should put a nice soundtrack of some Holy Diver under this whole episode just to make it appropriate. Of course, we'll promptly be sued, I'm sure, by the Ronnie James Dio estate. So we won't do that. Instead, we'll just move on to our next name. About as much of a polar opposite of Dio as you can get. Not the long flowing hair and crazy wailing about weird, oddly satanic verses. No. Just Coca-Cola, Warren Buffett's favorite name out there, about as boring and as bland as it gets. Ticker symbol, of course, good old KO, trading today. We're closing right around 42.5 or so on the day, off about 0.5% or so on the day. But it wasn't a rock and rollin' underlying day. It wasn't a rockin' and rollin' volume day either. This is a name averaging about 30,000 contracts a day, doing a little bit less than that today, doing about 28,000 or so. So it wasn't overall volume that caught our eye, much as one chunk that drew our eyeballs, that drew our attention. It was a little bit longer term paper, again, not as far out as April this time, but instead squarely in the February time frame, so kind of splitting the uprights there. Going for the Feb 45s this time. Looks like paper coming in, gobbling up the Feb 45s for 43 cents, and then turning around and dumping out quite a few, about 210,000 shares, so giving it up close to delta neutral here for prices in that range. So net gobbling themselves up some a little bit farther out upside vol, I should say. And open interest on this strike, only 2,000 contracts, so clearly open in paper. Senior Rock Lobster, what's your take on this longer-term upside love here? Or indeed just some vol love here for good old KO. You think Mr. Buffett is afoot?
I don't think Mr. Buffett would waste his time with the 10,000.
I was going to say 10,000 doesn't really register for him.
That's not even enough for him to change cars on his train or something. He doesn't care. Although somebody is backspreading Coke. Why would you do that? Where's it going?
I can think of a lot of names I would probably line up before this one for this particular strategy.
Short stock and long calls and Coke. The market has to do such bizarre things for that to make money, but it could happen. But I almost like it, the other way. But it looks from the pricing that they bought calls and sold stock, delta neutral. So unless somehow they flim-flammed it around where they put up the prices funky, it still looks like a backspread. Basically long calls and short stock on a ratio and looking for the underlying to move around. So it's not a lot of premium. But, at the same time, what's Coke going to do?
Yeah, this one, listeners, this one really has got to start rocking and rolling for this name to really, or for this strategy to really pay off. And I don't think Coke would be first amongst my choices for names that are due to rock and roll pretty heavily by February. But that said, I've been wrong before, so I wouldn't be surprised if it happened. But I think I would look elsewhere for my vol coming to fruition between now and the early portion of next year. As we turn our attention once more here in the final portion of the Odd Block to a relatively frequent appearer, a relatively frequent guest star here. It's like the Charles Nelson Riley of the Odd Block for the old 80s game shows. I'm full of dated references today. It's like Sebastian's on the show or something. But, of course, this is Mens Wearhouse, ticker symbol MW. They who famously or perhaps infamously parted with their Hirsute founder lately. He's off doing, I think, some tuxedo rental online company now, so kind of playing in the same space, but a little bit different. So the beardless founder-free Mens Wearhouse closing today, $39 and about 10 cents or so, off about 1% on the day. This is the name that does about 3,000 contracts a day, doing quite a bit more than that today, doing about 21,000 contracts. And once again, looks like our friend here, perhaps learning from our friend in Coke's playbook, Either that or perhaps they're sharing shows or someone inspired someone else, or it's the same guy. Who knows? Either way, he's borrowing heavily from that playbook. Once again, piling in to some upside, this time a little bit closer to home in December as opposed to February, but still a similar play. There was a Dece 41s that caught our attention, going up initially 19,400, a total of about almost 20,400 going up on the day. The initial 19,000 kind going up in one block on the Philly mega chunk for $1.65, putting up 750,000 shares against it for about 38.56. So you can see already there, listeners, some issues maybe have occurred with this trade. But still, yeah, another one who's lining up, again, open interest negligible, only 10 contracts. So all open in paper out here in Mens Wearhouse. And yet another person who's looking for some rocking and rolling here in Mens Wearhouse. Rock Lobster, if I had to sit down to myself and say right now, okay, here's two names I really want to heavily gobble up some delta neutral calls in, Coke and Mens Wearhouse would not be anywhere on that list. What about you?
Exactly. When I sent this post to you guys, I'm like, they're back spreading Mens Wearhouse and Coke. Either the prices went up to totally fool me, and that means they're doing the opposite, or somebody is back spreading this stuff delta neutral. And I mean, Mens Wearhouse is at the bottom of the range, but I don't see how they put this up as a seller of options. It just doesn't make any sense to me. So they're buying calls and selling stock delta neutral because they think something's going to happen. So, I mean, the volume's the same. It's kind of strange, to be honest. It's like the same fund said, well, we need to buy some juice today, so this is what we're doing.
If someone come out and some massive fund and said, what are the most boring names we could buy vol in? Let's do it. And then let's do it delta neutral, because why the hell not? Why wouldn't you want to sell stock half a buck below where it closed here?
Exactly, because it's not like they're going to let them buy the stock down there. Yeah. It just doesn't work like that.
If you're going to do it, why are you doing it delta neutral or on this? None of this makes sense.
It's just sometimes these are head scratchers. Doesn't mean these trades can't make money, but you'd think you'd want a little more of a head start than that. When you got to move that kind of volume, that's sometimes you just got to kind of eat it to get the position on.
Yep, you're already half a buck in the hole on 750,000 shares. That's a good way to start your day.
Yeah, and do you think do you think a liquidity provider is going to put that up and take that hit right out the beginning? I say no.
Yes, I'd say a resounding no to that.
Yes.
Oh yeah, this is a confusing one. We started off in the awesome realm of DO, and then we got ever more confusing as people can persist in doing trades that are head scratchers. Let us know, listeners. Maybe you like these better than we do. Maybe you see some hidden motivation that we do not. Maybe you're considering similar trades yourself. Let us know. We like to hear from you guys. You could challenge our perspective on these, but these are odd ones, however you break it down, which means they were good candidates for the odd block. But now, because it's Monday and because he's chomping at the bit over there, it's time to keep on rolling right on into the strategery block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, as Rock Lobster and I rock out to Dio here in the background, we will now turn the tables over there to Uncle Mike Tusaw. You love to come on every Monday with your wit and wisdom. Sometimes you're talking about rolling out in SPY. Used to be back in the day talking about buying every call you could possibly find in Apple and just not hedging it and just laughing all the way to the bank. So a lot of different approaches you've utilized out there. What do you got on the docket for us today, sir?
Okay, I don't remember. I don't know if I've ever bought a call on Apple.
I may have paraphrased a little bit there.
Slightly, kind of like a rainbow in the dark type of thing. But anyway,
I love it.
Yes, but with that being said, like I talked about in the trading block, I wanted to go over what I did today, why I did it, when I did it, how I did it, and all that fun stuff. And what do I do if it doesn't work? What do I do if it does work? So let's get started. Now, a rule that I have with my SPY call strategy is that if we are negative on the year, I don't want to be in any SPY calls. Now, keep in mind that's not an extremely hard and fast rule, meaning that if we go down tomorrow and we close at 205.53, then I might wait till the next day to close the position. It just kind of depends. But if it's anything below it the next day, I got to get out of it. And if we're positive on the year, I like to be in it. That's the bottom line. It's open to a little bit of interpretation, but not all that much, quite frankly. So with that being said, we closed positive on the year on Friday. We were at around the 207.5 mark in SPY, and I wanted to get into an SPY call position today. I waited till the end of the day to do so, just because of the fact that it was after a weekend and we have a lot of crazy things that can happen on a Monday. So I wanted to wait till day's end to get in. So with probably about 15, 20 minutes left in the trading day, I got into the January 205 call long and short the November week 1, which for those of you listening at home, it's about 2 weeks out. It's not this week's expiration, but next week's expiration. And so the overall trade was $6.05. Is what the fill was when it was all said and done. Or actually $6.04. Wow, I'm better than I thought. But anyway, with all that being said, what's the purpose of the trade? Why am I doing it? And what's the strategy? Well, I'm a long-term bull, meaning that I believe that the market will go up throughout time, as I've stated 16 trillion times on this show, and we haven't even had 500 episodes yet. So with that being said, I have to respect the market should it go down, because it does go down now and then. It's a deep, dark secret that most financial advisors don't like to admit. So now that it is in positive territory on the year and I am long the SPY call, I need to manage it. I need to have a plan for if it's going to go up, down, or sideways. So should the market stay the exact same over the course of the next couple weeks, I'm not convinced it will, but let's just say that it does, then when we get down to around 10 cents, then I will close it out and possibly roll to the next week or another option that has an attractive price of some sort. Now, why did I go with January? Well, I looked at every call option around being at the money or slightly in the money over the course of the next few months, and January did have the best bang for my buck, in my opinion. With that, if we did have a higher implied volatility, I likely would have gone a little bit more in the money with it, but I'd have to have a tighter call option to it if I were to go more in the money. I'm in the strikes that I really feel comfortable in at this point if the market goes up, down, or sideways, and that's what we're doing with it. Now, why did I pick the 210 half call instead of doing a front week call option? Well, there is a little bit more juice next week overall in SPY calls that are slightly out of the money. I normally don't like selling calls getting into a long call. I would normally prefer to get some type of a theta hedge or with a short delta theta hedge by maybe adding an additional put calendar spread that is slightly below the strike price. But in this instance, I feel that with giving myself 35 points of potential upside, I feel okay about that for right now. Also, when doing this, I did not want to have a large amount of deltas while getting into a trade again after being really just throwing around a few put spreads over the last few months. And by doing this, the overall net delta of the trade is in the mid to low 30s, just depending on what formula you're using for your Greeks. So on there, I like to be in, if I'm all in this specific strategy, I like to have maybe probably 60 to 70 deltas overall. But right now I only have around in the mid 30s. So I don't know if I necessarily want to call it a half position, because the 210 half call is something that I like to refer to so affectionately as bogus delta, or bogus negative delta in this case, meaning that it's still very likely with which you can make money on this trade should the market go higher, but we'd have to go up pretty high pretty quickly for this call to negatively affect us in I shouldn't say in any, but in a great amount. Now, if we do go up 35 points tomorrow, hey, I'm doing a cartwheel, I'm happy, I will gladly roll up that call option. That's one of the happiest things that I'm ever wrong about, is when I roll up a call option when the underlying goes my way. But if not, then I have the ability to get time decay in this. Not a lot, but it does mitigate a lot of the time decay risk that exists on the 205 call, and we have a little bit of upside that goes with it. So let's take a look at what do we do if the market goes up or down. Market goes sideways, hey, we'll stay in this and just let time decay do its thing. I won't make a ton of money, but I won't lose a lot of money either, most likely, and that's the way it is. If it goes higher, then what I'm looking to do is wait until we touch maybe in the low 210s in SPY. And at that stage, I will look to either roll it up or make some type of adjustment in some way, shape, or form, depending on how quickly it gets there. Now, of course, the question no one likes to talk about, what if it actually goes against me? Because trades do go against you at times, that I've learned in my 15 years of doing this, or close to 15 years of doing this. Should it go down, the first step for me is to get out of the short call option at around maybe 10 to 15 cents. But the thing that I'm looking for is if we go negative on the year, I want to continuously be selling call premium until I can't do it above the 205 level anymore. So in other words, let's say that we go down 10 points tomorrow. Now, if we do that, I'm not going to be able to get out of this 210 half call for 10 cents. The deltas just aren't there, but it could happen. You never know. But what I gradually want to do is roll down the short calls until we get to around the 205 level. So I'll still have some bullish delta on the table, but I never want to sell a short-term call below the 205 level, because that just creates a trade that you're cheering against yourself, and the deltas don't add up. So with that being said, that's my plan if the market goes up, down, or sideways. Should we get a little bit of a rally going into the Fed announcement on Wednesday, I may roll early. So I do leave it open to roll up, down, or sideways or whatever early before the Fed announcement. My ultimate dream of what would happen is that I stay in this trade for another 2 days. Right before the Fed announcement, the market drops real quick. I get out of the trade for 10 cents. Market goes way up real quick, and then goes up after the Fed announcement, and then I'm just an altogether genius. I'm not counting on that happening, though. So that is what is going through my head at this stage while we're going into what could be a very crucial week in the market. And that is how I am going to play it with this specific section of the RCM portfolio.
There you go, listeners. You can follow Uncle Mike's advice. You can just go buy some Delta Neutral calls in Coca-Cola or Mens Wearhouse, whatever floats your boat. Speaking of floating your boat, it's time for you guys to let us know exactly what does that, because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, guys, you guys know the dance. Twitter.com/options, Facebook.com/theoptionsinsider, StockTwits.com/optionsinsider, questions at theoptionsinsider.com, or just theoptionsinsider.com, and click on the feedback form. No shortage of ways for you guys to make your ideas, your insights, your questions, your queries known to us here on the old OB program. Kicking things off with Veg. He or she writes, "Hey, I don't know much about options, so I apologize for my noobness." Well, okay, Veg, we accept your apology, and no need to apologize. We welcome all stripes and all skill levels here on the old program. Okay, he writes, "In August, during the mini crash, were there traders selling premium in the equity options? If so, how does that work? Is the spread wide?" Okay, interesting question. We touched on this a little bit earlier on the program, particularly closer to the big August 24th sell-off there, where things just got rocking and rolling really quickly, and markets, as we've said many times, widened out substantially. You can think about it, if you're a liquidity provider, you're a market maker out there, listeners, you're not going to be quoting your standard width anymore. You're going to be at least multiple times of it, 2 to 3 times, if not wider, if you don't want to get hit at all. So yes, that is definitely coming into play, that those spreads are going to widen out quite a bit, which is one of the downsides, pun intended, of having that kind of premium. It's nice to have it and to ride it all the way down. You are going to make money on that trade, of course. But one of the frustrations we saw people coming out of that experience was, hey, I had these great puts in my back pocket. I did everything I was supposed to do. And then I went to sell them in the teeth of the madness. And guess what? The spreads were, $5 wide, $40 wide, depending on what you were trading. They were crazy town. So you don't want to hit the bid in that scenario unless you're really, really scrambling to get out, because you're going to sell things for well below what they should be worth in that environment. But also, it's kind of a difficult environment for someone to step up and fill you, because things are crazy and they're making their markets wide for a reason. So it's kind of that will they, won't they dance they have there. We have to probably be a little bit patient in that environment and wait for some of the froth to really work itself out of the marketplace before those spreads start tightening up, and before people will be willing to step up off of their bid and actually take something from you and not stand there and say, just hit me, because otherwise I'm not doing anything. So that's a bit of a frustration. Unfortunately, it's kind of the nature of the beast when markets do something that crazy, that out of norm, that these guys are just going to widen out. In fact, a lot of the traditional liquidity providers we've seen, like the people flickering in HFT quotes and others, weren't playing at all. So you're going after a smaller pool of liquidity to begin with, and they're widening out. Yeah, you're going to have to trade more wide spreads, and that's a challenge. In terms of how does that work, that's pretty much how we just laid it out. You know, unless you hit the bid, you have to work it and be a little bit more patient. Maybe that's a good topic for a webinar over there, Mr. Rock Lobster. You know, selling premium in difficult environments, and it might be an interesting topic. What were your pit chat traders? What were they going through on that day? And did any of them have any interesting experiences you may want to relate?
We had I had myself had problems, and you know, I tried to close some puts because they were so ridiculously priced, but I couldn't get fills, and unfortunately, I waited too long, and I just should have said screw it and just go buy the stock or whatever. So I had a lot of stuff explode, and I figured, well, it ain't going to get any higher than this, and that was the problem. It wasn't going to get any higher than this. Even trades where I thought that were reasonably fillable at the limit, just not a chance. So unless you basically wanted to give away your firstborn child, you weren't really getting a lot of great fills on that morning. So in the pit chat, yeah, I mean, we just basically, I told our clients, because for the most part, you know, we're kind of always a little hedged. So those market downdrafts, we want to, you really want to be unwinding your long premium. You want to give it to them, because I mean, once VIX hits 50, you know, there's only been a few times where it's higher. So you definitely want to give them what you've got. And so there is that. So it is not easy to get fills. And the one thing about selling premium is, you know, the snapback can be pretty brutal as well. So you sell calls, puts, and then you sell some calls against it because of the delta, and then all of a sudden you find yourself up 4%. You know, even when the vol's high, it can be very difficult. So all I would say is when the VIX is high, there is a reason. Just because it is high doesn't mean it's overpriced. It's just you're trading a volatile market, and then you had essentially 2 months of you know, pretty high volatility. And even if you sold straddles at that peak time when the vol was super high, I think there was more than enough realized move that, you know, they ended up losing. So actually, I know a lot of them did. So it was premium is high. You know, I like why you have kind of some sort of little hedge strategy, because when things blow up, you want to give it to them, and you want to be able to sell positions you have that are worth some money and go buy everything on the fire sale prices. But as far as trying to get some premium or having the markets wide, absolutely. And the reason is there's no underlying price. The whole idea of, remember, options always go back to the model. And if there's something wrong with the model, there'll be something wrong with the option price. So when there's no underlying price, it's very hard to price a derivative, because you don't know where it's trading. How do you make a market in something when you have no idea where the underlying is? Oh, it could be trading in Nepal. It could be trading in South America. I don't know where it's trading. You know, so the market is going to be very wide. That's how it works.
No, just to add to what you said, Andrew, I think that I think there's two ways that you can really handle something like that. The first one is the Uncle Mike double chicken wing approach. And as a wrestler, the best way to get out of a double chicken wing is to not get into it in the first place. The way with which that translates into option trading is that don't have, like, let's say you have maybe a short put spread on the table and something like that happens. Don't have a lot of capital tied up in that to begin with in case something like that does happen, so that you can live to trade another day, because it's going to happen at some point. The second way with which to do it is kind of what you said, Andrew, and I think this would involve having a portfolio margin account if this is something that you would really want to explore. And that would be, let's say that your long put goes way down, or the market goes way down, and you have these long puts you can't get out of. Well, you can buy the stock. And by doing that in a portfolio margin account, it's really not going to be much of a margin difference should you decide to do that. If the stock has a 10-cent bid-ask spread, which would be big for a lot of stocks, but yet the option has a $9 bid-ask spread because it's such a crazy market, then that might not be a bad idea to do something along those lines. So I think just the way with which to handle a situation like that is, unless you really have to, don't try and fight it. Don't try and get out of it, because you will get punished for doing that. I don't know if punish is necessarily a good word. It's just it's not a good trading environment. But the two ways with which to be prepared for it are what I just described.
Yeah, the underlying is always an option, pun intended, in those scenarios, even though not an ideal one either. But of course, none of the options at those extreme points are really ideal. So I guess you gotta pick your poison and go with it at that point. But interesting stuff. I don't think we've seen the last of our discussion here regarding that sort of extreme trading environment, because if the markets these days are any indication, we'll probably be seeing it again sooner rather than later. Interesting stuff. Good questions. We got to keep rolling on with the questions. Don't worry, we'll get to more on Thursday, listeners. But for now, it's time for our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block, the portion of the show where we tell you what we're watching, what we're keeping an eye on for the rest of this week. And as we alluded to at the top of the show, it's a hefty week, perhaps the biggest week of the season here right now in terms of names reporting and data and everything else. Of course, we got the big fruit company coming out tomorrow after the close, so that'll be a big one. A lot of people will be watching that to see where that takes the S&P, where that takes the tech names, and where it pretty much takes the market in and of itself. Apple almost an index unto itself at this point. We've also got good old Alibaba before the bell, so hopefully if you wanted to trade that one, you've done so already, because you pretty much missed your opportunity at this point. Good old Gilead, another one we've talked about, I should say, a few times in the old odd block. After the bell tomorrow, JetBlue, see how their big Wi-Fi experiment will play out for them. Free Wi-Fi on JetBlue, go for it. Then, of course, you've got Baidu coming up on Thursday. A lot of names really pretty much reporting later this week. Good old S-Bucks, one of my old names, Ford, talking about the automotive earlier in the show with some of the tech names. You got Ford coming out later this week, so there's a lot to get into. Also got some names in the energy side of the fence as well with Chevron. We got Rock Lobster's favorite names in the gaming sector, Electronic Arts. You pick your name, ExxonMobil. You pick your sector, you pick your name. Chances are they've got something coming out this week. So there's a lot to really keep our eyes to. We also talked earlier about, I hate to even invoke them, but of course there is some Fed drama on the horizon as well. Hopefully the recent news out of China will tamper that down a little bit, but you never know. They like to play the pay attention to us game. Hopefully that won't be on display this week. But that said, a lot of names to pick from. Mr. Rock Lobster, we'll start with you. What is really catching your eye for the rest of this week, sir?
Actually, Alibaba is, Apple is, JetBlue is kind of streaking, and the Fed. You know, do you remember trading when anybody cared what the Fed said?
I can remember a few times when the briefcase was imminent.
Yeah, it was just, but overall, besides that one surprise raise in like 94 or something like that, I just can't wait till the Fed's out of that part of the economy. Just like the day to day, like these are the rates, everybody go figure it out. It's just become so. All this central bank intervention, I feel, has not really. Great, the equity markets are higher, but I'm not quite sure it's really done anything. And they sure own a lot of paper, so maybe it has, maybe it hasn't, but I'll be glad when they're done. So I am looking for a contract low for the November VIX future on Friday. That's what I'm looking for. We'll see if it happens, and I will have to take my hat off to you, Mr. Longo, and looking at the lower ball. I thought it was going to go lower, but just not as fast as you did. So
my diehard pessimism for vol never surprises, sir.
Well, it does decay.
All right, and Uncle Mike Tusaw, amidst that sea of reporting, what is catching your eye, sir?
I mean, nothing different than what Andrew said. I think the Fed coming out on the Fed announcement will be a big thing, but other than that, just earnings and everything that Andrew said, and just curious to see if gold will go positive on the year this week, because I think that could be very possible, and I think this could be the beginning of a big rally.
All right, we'll have to play wait and see on those, listeners. We'll also have to play wait and see until our next episode of the old option block. But before we go, as always, one last time, let's check back in with my cohorts, my partners in crime, indeed my nemesis here on the old All-Star panel, who are often prone to take umbrage, but in between their umbrage takings, they may have something that may interest you. Starting off with you, Mr. Rock Lobster, in addition to your when to sell your puts in wide markets webinar, what else you guys working on over there in the land of the pit?
That'll be a hard webinar to sell, or maybe not. Maybe it'll be an easy one.
It'd be hard. It'd be hard in timing too, because you have to watch it in the middle of the market off 1,000 handles. Kind of hard.
Yeah. We have, strangely enough, a webinar about volatility, Pro Trader's Guide to Volatility, November 7th. It's a 3-hour Saturday class, and I guarantee you will learn something you didn't know before. Money back guarantee. Can't do much better than that in the options education world.
Of course, that selling puts could also be your shortest webinar ever. Just be don't do it. don't sell them at those prices. Those are crazy. The end. $100, please.
Some prices they're worth. When they're 20% out of the money in the S&P 500 and they're $10, you might want to think about it.
Yes, yes, indeed.
Doesn't mean you won't be scared at least once or twice in the meantime.
Just buy some Tums with it and you're good to go. All right, speaking of Tums, if you like to take some Tums when you're trading, then maybe you don't want to call this guy. But if you don't, or perhaps you're tired of it, or perhaps you ran out of Tums, you don't want to buy anymore, then you might want to give this guy a call. Uncle Mike, what do you have cooking up that may interest our listeners?
All sorts of exciting things going on in the RCM land. If you guys are interested in being a self-directed trader and you want to trade under our umbrella at either TD Ameritrade and or Interactive Brokers, feel free to contact me. We do get a discounted rate, but the main reason why I think you should call is if you are in a pinch and you need some advice on a trade, there's areas with which we can help. And there are some people that do come over just for the discounted rate, but the advice is the main selling point. More than happy to talk to people all day long. It's what excites me. It's what I do. And if it's something with which you are interested in possibly pursuing, give me a call at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
All right, listeners, hit him up if you are so inclined. Take advantage of those good rates and perhaps a little bit of his wit and wisdom along the way. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending us such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.